Hello and welcome to the special weekend edition. As promised, today we're going to talk about the uranium sector and the uranium stocks. Boy, this has been the most brutal slaughterhouse of them all, especially the SMR stocks like Oklo falling completely apart. We're going to look at the charts today. We're going to look at the levels. Let's go. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Okay, so we're going to begin with the URA, the ETF for the uranium stocks. On the daily here, and as you can see, it doesn't look good. We broke the 50, the purple line, confirmed the breakdown. Now we broke the uptrend and confirmed the uptrend that has been in place since April. We are oversold, as you can see down at the RSI, but not in any extreme levels. So this can go lower pretty quickly, even though we're reaching this very important blue support zone. Now, let's start with this. We're not even going to talk fundamentals today, because if you've been following this channel, then you know I've been one of the biggest uranium bulls since 2020. However, late summer, in the fall, I became very cautious because we're starting to see a bubble. This is playing out now. I was early, no doubt about it, and I missed the crazy phase of the bubble. But you look at the prices now of the uranium stocks, we're looking good now. Well, the fundamentals are still extremely bullish. As a matter of fact, if anything, in the past 2 months, they have improved with US President Trump finally realizing that Putin has played him like a fiddle in foreign policy. So that reduces the risk that Trump would somehow try to revert the law of the import ban of Russian uranium, or to extend the loopholes that are still in place on that, anything like that. This risk is reduced massively now, which is great for the American uranium producers. So this is actually a really positive development. But it doesn't matter because so much euphoria is priced into the uranium stocks, especially the SMR stocks. So let's look at the uranium ETF and see whether uranium stocks, which is very different than the SMR stocks, could end up, and if the worst is behind us. We have corrected about 25%. For an ETF, that's not nothing. So as you can see, if we confirm the breakdown, even though it's a red candle, you can see the close is lower than this break. So this is a confirmation. However, I prefer for us to stay below it for a few days to really confirm the downtrend. If we talk about uranium stocks, I've said this in videos before, you have to remember uranium stocks are the meme coins of the commodity stocks, right? They're the most speculative area that you can go. They will give you the highest gains, but boy, when they correct, they'll also correct the hardest. And that's what we see right now. Several of the good uranium producers down 50% from the highs. Now, these highs were completely exuberant, way too high short term, but still, that is quite a lot. And I really hope you listen to my earlier videos, and if you missed those videos, hit the subscribe button so you don't miss these type of warnings. We're not only talking long here, we're talking long and short, and I will say when I think it is time to take some profits, which I did with the uranium stocks a little too early. We'll get to it, but yeah, it looks like that's coming to fruition now. So we stay below the uptrend. That means that we're going to lose more and more momentum. That means we're going to lose more and more of the speculative momentum investors that just jumped on uranium because that was the hot trend that was going up. It's the same guys that were at the quantum computing stocks before, and the space stocks, and the cannabis stocks, right? This is the group of people that we're talking about. And the more the momentum stalls, the more of them going to leave because they don't really care in what they invest. They invest in momentum. So that's the first thing that's negative. If you look at uranium and at uranium stocks at this moment, you cannot only look at the fundamentals. It's important that you understand we have to look also at the momentum because we have a lot of investors right now in the uranium stocks still that are just momentum driven, that are just there for the quick profit. It's the fast money that's going to leave once the momentum stalls. So if they leave, the stock price is going to go lower, even though the fundamentals are great. This is the part that a lot of investors don't understand, that only follow fundamentals. That's why you need to know what is really going on in the market. So the 50-day average is toast. The gold line, that's the 200. So this is where things become interesting. So with this big support zone, now it's a support zone, it was a big resistance zone. As you can see, once we broke out, we hit the last part of the bubble, right? The complete Icarus style, too close to the sun. Right below this is 200. So this is a really nice double support zone already. Now let's look at the fib. If we add the fib to this, right, what does that tell us? So if we look at Fibonacci, oops, there we go. We can see that the 50, the 0.5 correction is pretty much in the middle part of the support zone. Interesting. And the 618 is right below the 200. So we have basically two clusters right now that we need to look at. This middle zone of the support zone, this middle part, which the URA doink, 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 has hit a lot. So this is an important area. Or the lower end with the 200 below it and the 618 below that. This support, this zone right here, around 36 to 35. If we get into a deeper market correction, this is a zone that's very much realistic. If we get like into a crash scenario, then we'll go way lower, but I don't believe we're going to crash. So do we need to buy right now? I don't think so. I'm not going to buy anything. I'll wait this out. I believe we're going to get lower prices, better prices to get back into the uranium trade. And I want to be in it, right? I want to, as you know, and I've said this before many times, I want to increase my positions. The long-term fundamentals are great. They're the best fundamentals in the whole commodity market. They're even better than gold. But not at every price. And right now, we have a higher downside risk than an upside risk. Why do we have a lower upside risk now? Because the momentum investors are leaving. Who is buying this? It's the momentum investors. If they are not in this right now, then it's highly unlikely that uranium stocks are going to go crazy. So therefore, the upside is capped. And we have a downside that could get us down to around 40, which is down another 10% in the ETF, which would be a lot higher in certain individual uranium stocks, or to around 36 to 35. So that means we're going down basically 20%. Now, that is then a 40% correction from the Icarus top. And that sounds pretty reasonable. So that's the situation. If we look at the spot price and the uranium price and the long-term contracts, the long-term uranium price looks beautiful. Keeps going up for years now, nonstop. And as a matter of fact, let me show you, because it's better to see it than for me to talk about it, the spot price right now. These are the spot prices for uranium in the past years. What is important for us is obviously 2025. And as you can see, in September, we broke 80. If you followed this channel, I've told you a lot, 80 and 100. Those are the two numbers in the spot price that are really important that changed the momentum, right? And that's what we saw. Anticipating that we're going to go over 80, we really rallied in September. It happened, right? October, we were a little lower, still over 80, and that was the peak. So it's extremely important for us to see, because as you can see, the last time we were above 80 almost was exactly a year ago for 2 months, and then we fell back. And remember, that led to the big sell-off. The decline in the spot price led to the big sell-off in the uranium stocks. Well, the Trump tariff then basically led to the complete crash. But if we go back down below 80 in the spot price, that would be another negative on the uranium sector short term. Again, short term. That's what we're talking about. So now knowing this, knowing the factors now, we're going to look at the SMR stocks. Because I know a lot of you guys love Oklo. You guys are really interested in that. So let's get into it. Let me move the picture back down. Here we go. Okay, and here's a chart of Oklo. Man, this doesn't look good at all. So if you remember, I recommended to sell Oklo and got bearish around 140. I think it was here. And you probably called your favorite voodoo master in Louisiana when we ran up all the way to 200 and asked him to make a voodoo doll of that Wilhelmi guy. But if you look at what happened afterwards and where we're now compared to when I recommended to take profits, well, maybe you canceled that voodoo doll order and instead went to your toy store and asked if there's a Wilhelmi action figure that you want to buy for your son for Christmas. It doesn't look good. Head and shoulders, completed pattern. You see it here, it's very obvious. 50-day moving average, curvy purple line, toast. Man, it crossed with the neckline and it didn't hold at all. It just ran. Oklo stock ran right through it. That's not great. Now we are at the support of this uptrend channel that held in September, held in August, right? That basically goes back to the May sell-off, to the low, to the April sell-off. Is this the end already? Do you want to buy Oklo? I don't think so. I think the majority of the downside risk is done for now. That's true. But again, Oklo, the ultimate, like all the SMR stocks, the ultimate momentum stock. When I told you to take profits on Oklo, and again, if you missed that video, hit the subscribe button so you don't miss these type of videos. I said, they will not have a product on market till 3030 at the earliest. I talked to a CEO of an SMR company about a month ago, I think it was, or 6 weeks. And he was really honest and he laid it all out and he showed me, I can't show you this, it's confidential, but he showed me basically an outline, like a timeline, and showed me where if you think of it like a timeline, like a calendar, and the right side is product to market and the left side is early planning stage, all the SMRs are clustered far, far to the left in the early planning stage. They are years away from any type of product on the market, and it's not even clear if the type of reactor that Oklo is building will be the type of SMR reactor that will be successful in the end. So all the SMR companies, while I believe that is the future, we do not know what this future looks like. If you're familiar with the SMR sector, then you know you have different concepts for the way the SMR reactors could look like. And I stress the word could. Oklo and some of these companies are basically, their concept is we're going to shrink the regular nuclear reactors to an SMR size. Other companies going in a different way as far as the cooling systems are concerned. That's the main difference. So There's, for example, there's a lead cooling system out there that's getting traction. And interestingly enough, Oklo participated in a financing round of a private lead cooling system SMR, even though they're developing a completely different SMR. Makes you think, doesn't it? So the SMR stocks are the ultimate momentum stocks. So if we see those collapse, which is clearly happening here, that shows us the momentum is going out of the uranium sector short term, which is healthy, which is good, which we as long-term uranium investors, we know we're going to make a lot of money in the sector. Beautiful. Let them all leave. Right? We took our profits early. We took them a little bit too early, granted, but now we have cash. Now we can wait it out. So how low can Oklo go? Well, the first thing I see when I look at Oklo in the daily here is this. If you look at the green candles, long wicks, almost always. This one candle is the one exception, right? Meaning strength is getting sold. On the other hand, look at the weekdays. No wicks, very short wicks to the downside. Meaning there's no buying on weakness right now. People are getting out. They are selling. So we have this blue support zone below this uptrend. That is nice. I do like the lower end better because we have the 200. Now let's look at the Fibonacci, if that gives us maybe a third touching point. And that shows us we are already below the 0.5. Okay, that one is gone. 618 is basically exactly at the upper end of the support zone. Interesting. The 786 is the one that's really interesting when momentum stocks fall apart. And as you can see, that's at the upper end of the lower support zone, kind of between the 200 and this longer term uptrend, the lower term uptrend. So somewhere here in the area of 66 to 60 to $56, that is the zone that makes this interesting. Now, we can also calculate out the head and shoulders and the downside potential that gives us. You know how that goes. We take the top here, we go down. Gives us about 42% downside. You measure from the break of the neckline, that was here. Again, we already broke the neckline, and we go down 42%. And that basically brings us to, here we go. So I'll leave this in, to the lower end of the support zone, right? Which is about 69. So everything points towards this area right here as the zone where Oklo will eventually end up if this sell-off continues. And that for me would be the earliest I would even look at this stock. I'm not gonna lie to you. I know that's not what you want to hear. I understand. But one of the most important advice, what's the plural of advice? Advices I ever learned from Wall Street is you have to learn how to deal with the markets you get, not the markets you want. And once you understand that, then it's much easier to sell the losers, to hold on to stops and sell when the stops are triggered, to take profits much lower after a stock has peaked, right? Because the market tells you, oh, the stock has peaked. While obviously what you want is you want it to keep going up or go up to the highs again so you can sell at the highest price. And right now, what we see in Oklo obviously is what nobody wants that's long in Oklo, but that's what the market is giving us. And the signs are very clear that this story is losing steam. And that's not great for momentum stocks. So this is where we stand with the uranium stocks right now. Fundamentals. Great. Gotten even better. We need to watch the spot price at the end of November. Are we falling below 80 again? Then that might be another negative factor on the uranium stocks. Can we hold the 80 or above 80? That would be very interesting, because that would be the first time there would be 3 months above 80 in the spot price. That would be positive. The charts, however, of the uranium stocks look bad. Borderline terrible. So I will wait with my investments. You need to decide what you're going to do with your investments. But these are not the type of charts where I feel I need to buy this today. This looks completely different than, let's say, the chart of total energies that I showed you on Friday in the oil sector. That's a chart where I'm like, I got to buy this. I got to be in on this story. Uranium stocks, not so much. If you like these type of videos, hit the subscribe button. Help us out with a like. I wish you a good weekend. Have a great college football weekend. I hope your team wins. Unless you're a Texas Longhorn fan, man, then I hope we're going to kick your butt. Talk to you later. Bye-bye.